Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by George Goncalves, MUFG's Head of U.S. Macro Strategy. It's Tuesday, June 18th, 2024. Welcome back to the podcast, George.
Good to be on, John.
Yeah, good to have you. And it's also nice to get back on a more regular schedule. I think between like you traveling and, I don't know, it just seems like things, the day-to-day just gets into the way. But we certainly we're on back-to-back episodes, and I hope we can keep it going. And there's plenty to talk about. We made it through a very heavy macro event period that covered, CPI, FOMC, BOJ, just to name a few. I'm certain I'm missing some there. There's obviously some turmoil in the European government bond market. Why don't we compare? Let's do this. Let's start the episode by comparing your expectations heading into those events. Talk about how they played out and if or how they've impacted your near-term view.
Yeah, absolutely. And so, let's kind of rewind the clock a little bit. We've had, what I think the first half of June was really super macro. I think for the balance of the month, there's a few more macro events, but I think it's largely going to be a function of positioning and just the markets getting ready for the end of the month and quarter. But looking back, we had the Fed, where we were thinking that we would see Powell be his more typical dovish self, and instead we got much more of a hawkish tone from his comments. And so that was a surprise to us. We also, the Fed only mentioned, or in their forecast, they're only now projecting one cut for 2024, and we thought that they were going to go down to two. And so, because of these things, and because we were one of the last holdouts for the July cut, we pushed back our expectations for the first cut being in September. Having said that, we do think that if something were to take place between now and July, not just data, but if something more financial were to take place, and markets either come under pressure or something more systemic were to occur, I think the Fed would change their views quickly. But we did not want to hinge our view specifically just on a tail risk event. So looking at fundamentals, I think that it makes more sense for them to do the first cut in September. And we also had inflation, which came in much lower than expected for both CPI and PPI, which will then impact the forecasts and thinking going forward. And then you mentioned the sort of volatility that has kind of emanated from the European markets, which I think had a decent spillover effect into our markets as well, more so through the swap spread. And then we had a number of auctions last week, which were also pretty revealing, especially post the 30-year Treasury auction. And what ended up being one of the largest rallies in the 30-year, with yields down more than 20 basis points for the week, one of the largest moves since the beginning of the end of last year. So a lot took place. I am watching the 30-year. I think that's going to be really critical for is this a bond market that's even more skeptical now that the Fed just signaled only one cut, but now we had a pretty decent rally. So we had a hawkish Fed, but the bond market didn't sell off; it actually rallied through it, which to me is the bond market pushing back.
Yeah, that's a great summary of what happened, and as you said, I mean, I only kind of hit on a few of the high points the last couple of weeks. So I think we now know where we are. Why don't we look forward into the end of the second quarter? What should our listeners be looking for?
So I think at this point it's more about, as I alluded to at the beginning, positioning and just the technicals. We have a pretty stretched equity market, which continues to kind of grind higher, but really getting concentrated. A lot of technical signals suggesting that this is gone too far. And as we head towards the end of the month and the quarter, will we see some sort of rebalancing between stocks and bonds? And so I think that's going to be an important thing to watch out for. And then towards the end of the month, we also get PCE, which, given the inflation data that we've already seen, is most likely going to have downside risks to the PCE, which is the Fed's actual measure for and their target for inflation. So if that were to come in with a 0.1 or something like that, or that would, I think, really capture the Fed's attention. It would be in line. Things are getting better, but they'd probably want to see two numbers. But nonetheless, I think that is what's out there. And then there's a few other topics which are important. As we head towards the end of the month and the quarter, we do have the first debate between former President Trump and President Biden. That debate on June 27th, I think, and will we learn anything around economic policy? With a lot of focus around housing lately and affordability issues. Inflation, of course, has been a hot topic for the last 3-4 years, and then tax policy. So we'll see if we get anything from the debate that actually is economic and policy oriented. But that's also coming up. That's going to be important as we head towards the end of the month.
Yeah, for sure. So maybe not as much of like real headline stuff to look forward to, but plenty ahead. PC inflation as you mentioned, and just stocks as you say, they just trade. They almost trade like a bad Chuck Norris joke. I mean, it's like they go up, on bad news, they go up on good news. They just don't go down. It's pretty incredible. But before I let you go, is there anything else you wanted to touch on and or any important topics we missed?
I think that's important. I think these are the main points. I think obviously watching the currency markets as well is going to be important with post BOJ. That's the lack of follow through on the yen. I think that's going to be important for all of us. And so I think that's something to keep on your radar. But I think in terms of the actual events that are known, I think we covered most of the major ones. And I think it's going to be positioning, technicals, any sort of rebalancing type trades, balance sheet type concerns as we head towards the end of the quarter, any funding pressures if they were to kind of surface. I think we've now moved away from macro and more towards the technical for the next 2 weeks.
Yeah, plenty of risks out there. They seem to all kind of not be causing anything disorderly at this point. Perhaps the exception of as previously mentioned, European government bond markets and a little bit in basis and swap spreads. But so far, so good. It'll be interesting to see if that continues to be the case. As always, I would encourage our listeners to read George's latest piece entitled The June 2024 FOMC Recap. One is the loneliest hawkish number that we've ever seen. And if you're still not receiving George's strategy reports, check out the MUFG research portal at www.mufgresearch.com, where you can find all of your favorite MUFG research, as well as sign up to have it conveniently delivered to your inbox. Great stuff as always. Thanks, George.
Thank you, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.